Dear students, under Advanced Corporate Accounting, we are going to discuss Unit 1, which belongs to Purchase of Business. In this chapter, we are going to discuss the details or the information regarding the purchase of business. Okay? Yes. First of all, let us know what do you mean by purchase consideration. According to Accounting Standard 14, purchase consideration as the aggregate of the shares and other securities issued by the payment made in the form of cash or other assets by the transferee company to the shareholders of the transferor company. Here, one company makes payment to another company by means of shares or in the form of securities or in the form of cash. The company which is going to sell its rights over that company is called transferee company, and the company who purchases the company or to whom the shares to whom the business is transferred is called transferor company. And methods under this purchase consideration, we are going to discuss about four methods, which is first one is lump sum method, and second one is net payments method, and third one is net assets method, and fourth one is intrinsic value method. Under lump sum method, the name itself indicates that the payment is going to be made in a lump sum amount, that means in a single mode payment. Let us discuss. When the purchase consideration amount is mentioned in the problem, then lump sum method is used for finding purchase consideration. Under this method, no further calculation is required. A lump sum amount may be stated as purchase consideration. What do you mean by lump sum method? When the purchase consideration of the company is itself given in the problem and no need to work out for the calculation of purchase consideration, so in that case, we have to adopt the lump sum method. Here, the lump sum amount is stated itself in the problem. That means no need further calculation is required. Example, A Limited purchases the business of B Limited for a consideration of 10 lakhs. In this problem, the purchase consideration is given at itself 10 lakh rupees. So there is no need to calculate the purchase consideration again by the A Limited. Second one, net payment method. Under this net payment method, purchase consideration is calculated by adding all payments in the form of cash, that is the shares and debentures in the new company, to be made to the liquidator of the vendor company. Yes. In lump sum method, the amount of purchase consideration itself is given in the problem, but in net payment method, the payment mode, the modes of payment will be given. That means how much of cash is going to be paid, how many shares are issued by the purchasing company to the seller, and how many debentures are issued in the new company to the selling company. So that means the modes of payment which is given either in cash or shares in debentures. By adding up all these items, we are going to get the purchase consideration. That means the payments which were made by the company to the seller. By adding these items, we are going to ascertain the purchase consideration. This method can be adopted only when all modes of payment are given in the question. Here we should remember that where all the payments were given, the modes of payment are given. That means how much is paid in the form of cash, how many shares are issued, or how many debentures are issued to the seller. So if some payment is missing in the question, this method cannot be adopted. That means if mode of payment is not given, that in that case it is not possible to ascertain the net payment. So we have to go to another method. Yes, let us discuss the contents in net payment method. The points to be remembered. While determining the purchase price under the net payment method, we should remember the following points. First one, the assets and liabilities taken over by the purchasing company and the values at which they are taken over are not relevant to compute the purchase price. And second one is all payments agreed upon should be added. That means in the form of cash or shares or debentures. Whether it is for equity shareholders or preference shareholders, whether it is going to be paid to equity shareholders or preference shareholders, if any liability is taken over by purchasing company to be discharged later on, such amount should not be deducted or added while computing purchase price. Even if liquidation expenses of the selling company are agreed to be paid by the purchasing company, they should not be added to the purchase price of the company. At the time of liquidation, at the time of closing the affairs of the company, one company has to make some expenses regarding the liquidation. If some liquidation expenses are met by the purchasing company, they should not be considered while calculating the purchase consideration under net payments method. And the third method is net assets method. Yes, under this method, what we have to do, we have to consider the book values of assets and liabilities. So let us discuss. Under this method, the amount of purchase consideration is determined on the basis of assets and liabilities taken over at agreed values. If nothing is mentioned about the values at which the assets and liabilities are taken over, then we have to consider the book value of assets and liabilities. If any revalued figures or present values of assets and liabilities are given under net assets method, one should consider the revalued figures, not the book values. If nothing is mentioned about the values at which assets and liabilities are to be taken over, in such case, one should keep in mind that book values of assets and liabilities are to be taken. Under this method, the purchase consideration is determined as follows. As we know that if revalued figures are given, we will consider that one. Otherwise, the book value should be taken into account. So purchase consideration under this method is calculated as assets taken over at agreed value minus liabilities taken over at agreed values. If agreed values were not given in the problem, that means the problem is silent about the revalued figures of assets and liabilities, then one should consider the book values, that means the values which appear in the balance sheet itself. Net assets method has to be followed when full information is not given about payments to different claimants in selling company. That means the payment in lump sum method is not given and the modes of payment is not given. In such case, if total information regarding the company is given, then only we are able to calculate by deducting the liabilities taken over from the assets taken over. One should get the purchase consideration under this company, under this method. The following relevant points to be noted while ascertaining the purchase consideration under this method. Some more points to be taken into account. When a company takes over another company or the business of another company, it implies that both assets and liabilities are taken over. For example, A company takes over B company, that means A company is taking all the assets and liabilities of the B company. The term assets taken over includes cash, bank balances also. That means all the assets which includes cash and bank balances. However, losses shown on the assets side of the balance sheet are not to be taken as assets. Sometimes profit and loss account debit balance may be given. Loss on issue of debentures and shares and debentures may be given. Some preliminary expenses, deferred revenue expenses may be given, which were not yet written off. Such items should not be taken into account while calculating the purchase consideration. Any specific asset not taken over should be ignored while computing the purchase price. For example, any asset, maybe furniture or plant or machinery, which is not taken over by the purchase company, so we should not consider that particular asset while computing the purchase price. That means the assets, we have to exclude that asset not taken over by the purchase company. Liabilities include all amounts due to third parties. Liability means obligations, that means which are due to the third parties we should consider. Trade liabilities include, as the name itself says, that creditors and bills payable and other liabilities like bank overdraft, tax payable, outstanding expenses are not a part of trade liabilities. Only trade liabilities include two items, creditors and bills payables. Other liabilities, bank overdraft, Outstanding taxes and outstanding expenses are not a part of the trade liability. If any accumulated profit is there, it do not form the part of liabilities. They belong to the shareholders as accumulated losses which appears on the assets side, not to be taken into account. In the same way, the accumulated profits which appears on the liabilities side should not be taken into account while calculating the liabilities taken over. That means the accumulated profits as well as accumulated losses belongs to the shareholders itself. If any fund or portion of fund denotes liability to the third parties, it has to be included in the liabilities. Example, staff provident fund, workman's savings bank account, workman's profit sharing fund, etc. These three items are obligations to the company to be discharged. So they should be taken into account while calculating the purchase consideration. Liabilities not taken over should be excluded from the computation of net assets. If any particular liability is not taken over by the purchasing company, we should just leave it as it is while calculating the purchase consideration. And intrinsic value method. Internal value method, this one is also known as internal value method. In the net assets method, purchase consideration is calculated on the basis of net assets of the vendor company. The purchase consideration is discharged in the form of shares, cash, etc. As we know that under net assets method, what we did, we have considered all the assets which were taken over by the purchasing company at an agreed value, and we deducted the liabilities which were taken over by the purchasing company from that. The residual figure is known as net assets. The purchase consideration is paid in the form of shares or cash or etc. in net assets method. Sometimes a student is asked to calculate the intrinsic value of shares of both companies and determine the ratio of exchange of the shares between the vendor company and purchasing company. Sometimes instead of calculating the net value of the net assets of the company, a student is asked to calculate the net value or intrinsic value of shares of both companies. So for this purpose, we have to find out the intrinsic value of vendor company and purchasing company. Intrinsic value can be calculated as follows. How it is possible? By following the equation. Net assets is equal to total assets, that is excluding fixed assets, profit and loss account debit balance, loss on issue of shares and debentures, and fixed assets like preliminary expenses minus all outside liabilities and preference share capital. Discharge of purchase consideration in this chapter. Under the net payment method, the discharge of purchase consideration is the same as the calculation of purchase consideration. Under the net assets method and lump sum method, the discharge of purchase consideration is based on the information in the problem must be ascertained. One should note that in case of net payment method, the amount of purchase consideration is to be discharged same as calculation of purchase consideration, because there is no need to calculate the purchase consideration and net payment method by adding up all the payment modes of payment in the form of cash or in the form of shares or in the form of debentures. So there is no need to calculate purchase consideration again and again. But under net assets method, lump sum method also it says itself the purchase consideration in lump sum amount. The discharge of purchase consideration is based on the information in the problem must be ascertained. One should keep in mind that whether the information provided in the problem belongs to net assets method or lump sum method or intrinsic value method or so on. So when the problem is not having any information about the discharge of purchase consideration, that means it should be made in the form of cash, or it should be made in the form of shares, or it should be made in the form of debentures. In such case, it should be assumed that purchase consideration is discharged by issue of equity shares of the purchasing company. That means no information is giving in which form the purchase consideration is paid by the purchasing company to the vendor company. Then student should know that the purchase consideration is paid exclusively in the form of equity shares. The factors which will influence the determination of purchase consideration, let us discuss the main points. Yes, first one, intrinsic value of the assets. Which will affect the intrinsic value of the assets? Market value, age and lifespan, and the location where it is situated, scarcity and uniqueness, and the uniqueness of the asset, and buyer and seller factors, bargaining power of the buyer, and financial situation of the buyer and seller, and motivation of the market, and time sensitivity. And third one, external factors like market trends, economic conditions of both buyer and seller, legal and regulatory factors, and financing options, due diligence. Thank you, dear students. I hope you understood very well regarding the purchase of business. Thank you.